Good morning. Welcome to the market forecast. Today is Thursday, August the 12th. I'm John Hoagland. Thanks for trusting me with your time. Even my coffee cup looks happy this morning. Hopefully, we're all doing well and feeling happy. It suffices to say that happy traders make better traders. Hopefully, things are going your way already this morning. As always, we're going to look for accurate context, good risk management, and exercise infinite patience today. This morning, the economic numbers came out 7:30 this morning. Of course, the jobless claims and PPI final came out. Jobless claims came out lower. There was an upside revision, but the talking heads are talking about jobless claims at the lowest level since the beginning of the pandemic. So that does look like some good news. But the PPI numbers, not so good. Higher prices, higher wholesale prices. Inflation continues to leak into the economy. 9:30 this morning, Central Time. The nat gas numbers due out. As far as other things going on in the news, the S&P and the Dow futures posted new all-time highs last night. The Nasdaq continues to lag behind that, as well as the Russell. Crude prices hold at recent gains, while the IEA has downgraded oil demand for the rest of the year, as Biden has now also asked the Saudis to start pumping more crude oil. I don't know why we can't do that. A few final earnings may be impactful at the end of the day today. We have Disney, Airbnb, and DoorDash. That should pretty much wind up our earnings season for the year. As usual, make sure you hit that lucky like button. Make sure you share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel. You get notifications when we do go live. VIX pretty much steady at 1610. Dollar index smack dab at $93, and the 10-year yield up slightly at 1.37%. Been up since 5 o'clock this morning, and I still feel like I'm a little foggy, but that's all right. I've got my happy cup of coffee here to help me wake up. I got to say good morning to everyone as usual. We've got Brian, first one in the room. You win the prize. George, good to see you. John, Bill, Caesar, Drew, good to see you. My goodness, I apologize. Fred, thank you for coming to that session and emailing in your question. Hopefully it was useful for everybody. I just love those sessions, and we're going to be doing a lot more of that in coming days and weeks and months. Murph, good morning. Feeling good today, as usual? Good. Football season coming up here. Ace heckling. Uh-oh. We're going to be talking about the Bears here, I think. There was a QB named Trubisky who made Bear fans want to drink whiskey. He came to Green Bay, the Pack had their way, and the Bears thought they'd been hit by Nitschke. Very nice. That's an actual poem. I'm wondering, Fred, if you put that together yourself. Yes, Murph is Mr. Positive, isn't he? He's got a great outlook on things. James, good morning. Rob T, Steve, Fred, do you think the long time frame buyer could have entered on yesterday's move higher at the weekly kickoff low? Thinking you're probably talking about crude oil, but we're going to take a look at that in the charts here shortly. If you can let me know for sure that that's what you were talking about, we'll be a little bit more specific for you. George, good morning. Jim, Vince, good morning. Laura, I should say, good morning. Daniel, Ryan, Polymath X, good morning. Jason Cargill, Joseph, the future scalper, Deanna Floyd, Sean Miller, good morning. Nothing like a little thunderstruck in the morning to get ready for Friday trading. Drones over Texas. Gabriel, good morning. Subham, good morning. Jerry is awake. Norman Walford, good morning. Fred, an open within prior day's spike is bullish for crude oil today. The spike is only one data point. Sergey, good morning. April, Nelson, Rob, Rick Hoagland. Hey, I know that guy. How you doing? Hope you're having a good day, Rick. KM and Nick Ends. Frederico, good morning. All right. I think I've got everybody here. We are just about ready to jump into the charts. Fred, I was talking about crude oil with the long time frame. Okay, all right, we'll look at that right now, Fred. Let's take a look. All right. Al-Haji, good morning from Belgium. Good morning. Coming from a long ways away. All right. So, crude, we have to remind ourselves during rollover, which is every month for crude oil, that it is in rollover. Now, volume was good yesterday on the move. Hang on a second here. I'm going to get some more information for Fred here. So, it's so difficult to gauge open interest during rollover. The volume, even in the September, which is the expiring contract, we're going to be switching to the October contract next week, early next week. Not yet, early next week. We'll be watching the volume. We'll be talking about that. So the volume was good on this move up yesterday. Now, the day before that, the move away from the weekly kickoff low, well, actually, we did test down to it yesterday in the regular trading hour session. We were talking about that on the open. In this meeting, we were seeing price getting down to the 67 even, looking at it, saying, this is an opportunity. There's going to be some fish here. We'll take a look at that on the 30-minute chart. Was there new business coming into the marketplace? Now, when we look at the overall open interest, we lost 9,600, which would indicate that we lost open interest off that move, that this would have been a short covering rally. But when we look at the October and the November contracts, they added 22,000. So September is expiring. People are probably going to be moving those positions into future months or getting out outright. If they got out outright and we saw an increase in open interest in the coming front month and the month after that, I would say there was some pretty good opportunity there's a pretty good probability that we added open interest and that we brought in perhaps longer time frame buyers off of that level. That was a hell of a move off that 67 even level. Now we've got more information, okay? We've got some fundamentals and politics in the market today. Anything can and will change. It's one of the things that we all love about this is it's always a challenge, and there's always something new and there's always something new to learn. There's always something new in the markets and always something new to learn. So here's that move. Right after the open, right when we were on this chart yesterday, we traded directly to that weekly kickoff low. We said, hey, this looks like a pretty good opportunity. We have the island low that we put in here on Monday. So we gapped to the day session range on Monday. We gapped away from it on Tuesday. Yesterday, we tried to get to close the gap. We were unable to do so in the regular trading hours. This move to this 67 even weekly kickoff level was a gift. I did not participate in it. I was busy doing this, and I was not prepared for this opportunity. So I had to watch it play out without me. I didn't try and weasel my way in because, well, that's not been my specialty. Are we looking at this as a late spike? We can be. Let me make sure I'm on the right time here. Yes, 1:30. So, we did have this move up. We did have a little bit of time to start to accept higher pricing here. Is this a late spike? I'm going with, to some degree, yes. Do we have any overnight inventory? We do not. Have we opened and we are kind of pushing back towards settlement? We are. Is there an urgency to get into the marketplace today? Maybe, maybe not. We're in range. We're in value. We don't have any overnight inventory. So I'm going to try and stay patient. If the opening range is the low of the session, that may give us an opportunity to see buyer control off the open. There's likely to be some fish here at the point of control, which is settlement, which, by the way, is 69.25. Put that on your charts. We've got the yesterday's high. We've got our overnight high. There's some interesting areas here. There's not a lot of easy ways to limit the risk. So again, I'm going to try and stay patient. All right. So As far as your answer, Fred, because it's rollover, it's difficult to gauge open interest, and an increase in open interest in the future months, while the current September month lost open interest, can be an indication that longer time frame buyers did enter the market, but in the October and the November contract, as the September contract lost more open interest than was gained in those two front months. So, or the two next months in October and November. So rollover blurs this, but this is something that I look at. I look at what happened in the front month. It's expiring. Of course, open interest is going to drop in it. Is that, traders rolling those positions into those two future months? Or was that liquidation in the September contract and new buyers in the October and November contracts? We never know. Everything is hypothesis. Hopefully that helps, Fred. The Nasdaq, the E-mini S&P. This is the little market that could. No matter what seems to happen, no matter what we think, it just seems to want to continue to grind to the upside. This market is continuing to build open interest over time. We added another estimated 11,000 in open interest to the upside yesterday. We had another delta divergence where price moved higher against negative delta and added open interest. This auction, though looking like it may be tiring, is still presenting as a relatively healthy upside auction, so I'm going to treat it that way. It is so resilient in the face of inflation concerns. Direction, it's attempting to go higher. Performance, the momentum has fallen off, but we're still seeing open interest. We're still seeing money coming in. Volume overall is maintaining, so it still looks like a pretty decent, healthy upside auction, which can change with a tweet. We're all well aware of that. So we do have another new all-time high in the extended trading hour session with no bad news. I'm looking for this market to continue the grind to the upside. I mean, it's going to do that until it does. What my dear old dad used to say is, it always looks the best at the top and worst at the bottom. When everybody gives up and they all finally buy into the upside, that's when we're going to see our pullback. Good morning, stacking bananas. Here's the 30-minute chart. Okay, here's night before last's all-time high. We've got another new all-time high in the overnight session. Settlement is 44.40.50. We don't have any overnight inventory to deal with. One of the things that we know visually traders will be looking for is to take out the all-time high, which occurred in the overnight session in the regular trading hour session. Time after time, it proves to be true that the market does not like to leave all-time highs in the overnight session. It's at some point it's going to take it out. When, where, we don't know. Again, this is not a market that has just experienced some important economic information. Doesn't seem to be. I mean, it's come off a little bit, but it's not moving, like there was some shock. So as whatever happened at 7:30 this morning is digested and forgotten about, because we know that traders have very short memories, this thing could just turn around and continue to move to the upside. Do you find it interesting that the overnight low matches yesterday's value area low? That could be an interesting spot for us. There's a kind of a high target area here with value high from yesterday, point of control very close to it, and settlement right between them. This looks like an interesting area. Most of the time, settlement, is an area for more of a target for me than an entry area, but it could be today. We've got our work cut out for us. These markets have been providing really even nuances to either direction. I'm talking about the equities mostly. there's been a stack of nuances that say, yes, we think this market is going to go higher, and there's a stack of nuances that says, no, we think it's going to go lower. And it seems to be increasingly difficult, at least for me, to determine what is the most important nuance at the time that we're looking at the market. We're going to be opening in range and in value. I'm not looking for an opening range trade, which means that might actually happen. So while the equities continue to grind higher, I think it's more and more confusing to traders. If it is confusing me, it's confusing other traders. And just be cautious. Make sure you're looking for opportunities to limit the risk. Fred's talking about a comment yesterday, begins looking at a trade opportunity by asking how much risk is involved. If I see a level that I like, if I see a structure in the profile or in the charts that looks like an interesting opportunity, a high target area, a place where we might find some fish, my first question is always, what's it going to cost me if I'm wrong? Because I don't like to lose a lot. I don't mind losing. I don't mind losing as long as I'm in process. Not every trade's going to go my way. I just like to be able to limit that risk and look for the opportunities that I'm taking to be much bigger than the risk that I'm taking. Nasdaq, short time frame structure lower. Could this be building a bull flag? I mean, it's done it before. But certainly the momentum to the upside has fallen off. We lost 1,000 in open interest yesterday. So there's no big money coming into the short side here yet. More like maybe some short covering here a little bit. Okay, but no barreling into the short side, increasing open interest. The open interest loss is not good for the downside auction, but the volume is actually pretty decent yesterday. Not tremendous. We usually do bring in more volume on down days. We have an inside extended trading hour session last night. We have a very narrow range for the Nasdaq. I'm going to be looking for that to be expanded at some point today. Take a look at the 30-minute. Okay, so we've got kind of a loose trend line here based on bottoms of regular trading hours. Okay, so this could be the bottom channel of a potential bull flag. It's a little rough up here, but I've got, just kind of across this regular trading high. Let me fix this just a little bit. And, we've got three regular trading highs that are pretty close to that. This was pretty much rejected. I'm going to leave this line here for now. It may not come into play, but as far as the short time frame look here, settlement is 15:1950. Put that on your charts. We are inside range and value. The information at 7:30 seems to have had a bigger effect on the Nasdaq than it did in the S&Ps. Nasdaq is a little bit thinner. It doesn't have the same liquidity as the S&Ps, which may be part of the reason for that. I don't think that we're holding a bunch of overnight lows. Overnight shorts, I should say. We've got our overnight low relatively close to value low from yesterday. I'm thinking, if we're going to follow this channel, a move down towards this trend line might be a better opportunity for us to look for longs. Again, I'm not in a big hurry to get into the Nasdaq today because, again, we're in range and we're in value. There's very little change to the perception of the value of the Nasdaq composite index here. It hasn't changed much. We've been seeing value moving lower. We've been seeing lower highs and lower lows. Does that tell me that I want to look for opportunities to sell strength? But I think we're a ways away from being in that situation. Look at our overnight range. Overnight high, overnight low, value high. We haven't left value all night. There's not a big change so far in the collective perception of value of the Nasdaq. We've been mentioning that the market has kind of come into an area where it's value-based, not momentum-based. So here's the gold. Weekly kickoff low, okay, which is What is it again? 1754 even. It's right here. It seems to be becoming a little bit magnetic. We barreled right through it on Monday, Tuesday, Wednesday, Thursday. We've been working our way back to that level. Kind of similar to what we were talking about yesterday, Fred, in crude oil. If this were the 30-minute chart in crude oil and we went back down and we went down through that 67 even level, and we came back up to it, this gives us the opportunity to use this level to limit our risk to look for continuation to the downside. Now, I'm not suggesting that that's what's going to happen here in gold. We lost 1,400 in open interest off the low yesterday. Maybe a little bit of short covering came back in and pushed this market right back up to that weekly kickoff high level, which is pretty much right where it settled. Weekly kickoff low, I should say, is 1754. We settled at 1753.30. We haven't gone very far either side. We're still kind of looking at last week's low here as a kind of an interesting area. If that is last week's low, I'm not quite sure what the hell that is. Yeah, that's last week's low. So we've traded back to last week's low in the overnight. And what are we looking at here? All right, so the market really kind of treading water here at the weekly kickoff level right here. I'm going to move this a little bit lower, and then we have settlement here, 1753.30, really just kind of holding close to it. The market did open and leave the opening range at the high of the regular trading hour session. It did take the market right back down to point of control from yesterday. Remember, point of control is a visual target. And we're just kind of ranging back and forth here between, I would say, value high from yesterday and the point of control from yesterday. Opening range high is 1751.80. I usually put a little marker on my chart like that so that if the market takes out the opening range in the regular trading hour session, I can just see that visually. It has not done so yet. It has taken a look again down to point of control, back to the opening range, still kind of hanging in the opening range. It's a very large opening range today, which makes it even more difficult to navigate. But as for right now, the opening range remains the high of the day, indicating potential seller control. Not all that convinced of that. So I'm looking for one of two things. I'm looking for another opportunity at weekly kickoff high. It's going to be pivotal today. If we accept above it, I'll look for continuation to the upside. If we continue to show signs of acceptance inside value from yesterday, even though we didn't open out of range, acceptance of value could make this market start to rotate between value low and value high from yesterday. So pretty decent opportunity here at at the opening range. And again, it's given us a really cheap opportunity near the high of the opening range to look for a potential short. Let's see here, 1751.60, 51.80 is the high of the opening range. So we got within 2 ticks of the high of the opening range, which would give us an opportunity to very severely limit the risk. You could risk 10 ticks on that, and if we don't take out the high of the regular trading hour session or the opening range, then you've got all this space down here with which to potentially profit. So it's a very cheap trade, and one that I would really think about taking. We've got the opening range high, we've got value high. We've got some traffic above us and some visuals up there. We've already taken care of our visual to the downside, but the longer we stay inside value from yesterday, I think that increases the probability of a move to the other extreme of it, even though it's not a true value area special situation play. Let's look at the euro now. Just like gold, it's just hanging around weekly kickoff low. It's going to be magnetic and pivotal today. Be careful. It's kind of a long above, short below pivot type situation, but if it remains magnetic, that's just going to chew you up all day. So be cautious trying to catch the breakout or the move away from weekly kickoff low. You don't want to risk a lot on those trades. Volume and open interest yesterday indicate rejection off the lows. We had a little bit of higher volume in a 1,200 contract increase in open interest. So buyers maybe came back to bring this thing back to that weekly kickoff level, which, it's 1745. We settled a half a tick above it after the regular trading hour session yesterday. Not necessarily a cheering windfall of buyers coming in to move this market higher. So the inside extended trading hour range near an important inflection level. Be cautious. We opened basically right at, here's settlement. Remember, it's one tick 45. It's one tick above. It's at the point of control. That was misplaced there. Sorry about that. We opened in range and value with very little overnight inventory, right at weekly kickoff level, right at settlement. I'm going to be, really trying to look for opportunities to, see if there's something. I think we checked this yesterday, so I'm going to take this back a little bit. Yeah, we did check this yesterday. It was pretty much our low from the open and the overnight session. There we go. What are we looking at here? We're looking at a market that has very little change in the perception of value, collective perception of value. Value yesterday was from here to here. We're still inside it. We opened inside it. We opened, in a very comfortable situation. We opened right at point of control. Probably lots of people digesting the information that came out earlier this morning. I'm going to try and stay patient in this market, as well as I think the 10-year. Now let's see what's going on since I've been yakking here. Open interest indicates potential short covering. As the market has gotten closer to weekly kickoff low here, volume has started to fall off. We had a little bit higher volume yesterday, and we lost 37,000 in open interest, indicating a potential short covering event yesterday. All right, we're still inside the extended trading hour range from yesterday. 30-minute chart. We've managed to trade down to value low from yesterday, which may actually be somewhat supportive. It does give us the opportunity to limit the risk. We've already bounced off it by about, about 6-8 ticks, half ticks, I should say. So, again, we're basically trading at point of control from yesterday. I can't do anything here. I gotta look for opportunities where opportunities lie. Rejection yesterday. We haven't even gotten to those yet. In the regular trading hours, we haven't even left value yet. Stay patient. My brother pointing out PPI up 7.8%, most on record. Well, we're looking at a situation where we may be going back to the 70s as far as inflation is concerned. A lot of folks talking about that. And I've yammered on long enough. We're about equities opening now. Looking forward to seeing you back tomorrow morning. It is going to be Friday. I think today is Thursday. Yes, yesterday was Wednesday. Tomorrow's Friday. I'll be back tomorrow morning for the market forecast. 8 o'clock. I'll try and finish yammering before the equity open tomorrow. We'll see Dan for the market recap today. Looking forward to seeing a good trading day for all of you, and trade well.